In respect to what we've been talking about, we are looking at market structure. I think the market structure happens to be the first thing we need to look out for. How does the market move? How does the market behave? You need to understand when your market is trending up or when your market is trending down. Based on those rules, the first thing we talk about is identify your trend. Is the market selling? Is the market buying? So looking at market structure, based on what we have here, we said that in a bullish market, the market makes new higher highs and higher lows, causing a break of structure after each impulse movement. I know we are talking about impulse movement the other time, and this is where we get to understand the impulse and also the correction movement. Now, in a particular trend, either uptrend or downtrend, the market will be creating higher highs or higher lows or lower highs. For the sake of what we have here is a bullish movement. That is, we have a low here. That is the genesis of this particular trend. And we have a high here. As at that time, we don't really know if the market is even going up or coming down until the market push to the downside to create a new higher low. Why do we call it higher low? The low is a low, right? But we notice that this low is higher than the previous low. Then we call it a higher low. And the market pushed to the upside to go and create a new higher high just because this particular movement here, it was a high as well. But this particular movement has pushed the market to the upside, creating a high that is higher than the previous high. As long market continues to create that particular direction, then we said we are in a kind of uptrend. And that's that's just a paperwork. And here we have a chart representation of this particular movement to the upside. And also we have this on a downtrend as well, which in a bearish market, the market makes new lower lows, lower highs and lower lows, causing a break of structure after each impulse movement in that particular direction, in that downtrend. So just like what we have where we have a high that creates this particular low. The market pushed to the upside, giving us a lower high. It's a lower high just because it's a high, but that high seems to be lower than the previous high. And the market pushed it down and give us a lower low, lower high, lower low. As long as the market continues in that particular direction, we say we are in a downtrend. Looking at what we have, this particular movement is giving us that downtrend to the downside, and that is why we notice that here we have a lower low, lower high presenting on the chart. And as a trader, all what you have to do is to find a way to follow that particular trend. Looking at break of market structures, based on what the trend is talking about, you must understand the direction of the market. So here now we are having a structure. If you notice what we have a seller prayer zone side. We also have the buyer's prayer zone. So irrespective of the direction of the market, you always have that area that should hold the market. That's something you need to understand about this particular simple concept. Here we have the seller zone. That means those are the zone at which you want to sell from. We have the buyer zones. These are the zones at which you want to buy from. Now, based on what the rules has given us in that particular material, is well stated that let's follow the trend. So that means for the sake of this particular chart now, the market is a downtrend. I don't expect us to continue to sell. So here we are talking about break of structure. As long the market is in a downtrend, the price or the market will continue to break structure to the downside. This is a downtrend. What happened? The market continues to break structures to the downside, and the market is now respecting the highs, taking out the lows, respecting the high. But see what happened here. As at this particular junction here, we notice that the market failed to do what? To break this low to the downside. The market fails to break this particular low to the downside. So as at that junction, we don't really have a break of market structures to the downside. So when the market is trending, you're expecting markets to continue to break structures in the direction of your trend. So for a downtrend, we're expecting break of market structures to the downside. Why for an uptrend, you expect markets to do what? To continue to break structures to the upside and respecting the lows. Here, the market pushed to the upside, but if you see what happened, the market did not really break structures to the upside, and we have a sell. So for you to understand the direction of the market, you need to understand who is in charge of the market. Is it the buyers or the sellers? I think one of the things I've always used to identify that is the impulse and the correction movement. So let me show you here. You see, we have the expansion and that of retracement. That's the impulse and correction. So here we have a kind of expansion here. Look at the correction to the downside, that's the retracement. Here we have another impulse movement. Look at the corrections to the downside. Here again, we have a very good impulse movement. Look at the corrections to the downside. And if you notice, those corrections are just mitigating some particular levels and the market continues to push to the upside. So as a trader, you have to understand how the market moves or how the market really behaves. Yes, which is how the market behaves. That one is very, very important. So once you understand this, it makes things easy for you because you approach the market in a very easy way, which you already understand that if the market is trending up, it's creating higher highs, higher low, higher highs, higher low. And if it's coming down, it's giving you lower lows, lower highs. So for this particular episode, I will advise you take some time to reflect on yourself. Look at your chart very well. How do you follow chart? How do you follow the trend? And that will help you to figure out what really works for you on the chart.